So hello guys, welcome back to another live session. Okay, this is day 4. Okay, and it's 4 p.m. Indian Standard Time, and now we are going to start our back test. See, our days are not going good, but anyways, I am. That is the reason I have taken data from 2017. Okay, I know I am not perfect right now. Okay, and that is the reason I'm picking up data from 2017 so that I can learn. Okay, I have to learn my strategy. Okay, I know what I want to find, but I have to make some pictures in my mind. Okay, about some kind of scenarios that can form. Once I know that, okay, now I know how to trade on the strategy. Now I know how to find it, what is the perfect time of the day for this strategy. Okay, after that point, then I will go to verify on 2022 and 2024 data. Okay, so I will try to get out the analytics of those 2 years for USD and GBUSD to take the data. Okay, till then I'll just have to practice. Okay, just contrast. Okay, and backlight. Good. Okay, I hope so I'm audible and everything is visible, right? So how much live session going on? 35 minutes. Very good. Okay, let's start. Have the session right now in front of us. Glory red. So data, we have to do a layout. Okay, now here we are. So okay, 1 minute time frame. Date, the date is 24 January. Okay, and after this session I think we'll pass the January month of 2017, which means it takes us around 4 hours go through 1 month of backtesting data for me. Okay, for me, because I don't know my strategy. Okay, let it be. Let's go try to see what is happening. Again, we'll do top to down analysis. Go on the 1 hour time frame. Sorry, 1 day time frame. Okay. I was going through the lectures of ICT and then I found that, okay, I want to do something, form some decision, make those decisions over the 1 day, 4 hour or 1 hour time frame, because that is what is was by the was by the market makers. Okay, so we'll try to analyze on 1 day, 4 hour and 1 hour to form our decision. Okay, and then we will go inside those time frames on time frames to form any kind of trade. Okay, let's see what happens. Buy sell liquidity got taken, expecting the price to remain below this particular point, but it didn't remain. I expect it now to remain below or reject below this particular level. Okay, you could say this level, this particular level, it should remain below. Okay, buy side is taken now. It should start or show some kind of content to go downwards. Okay, and also it should show some willingness to, there's a price swing upwards. So some willingness to go like to the equilibrium point of this thing. Okay, the equilibrium point I have mentioned. Let's see what the price is trying to do. Okay, we are at 25th January, Tuesday. Okay, now on Monday, sorry, Friday, here it is, Friday. On Monday, the price has swing upwards. Okay, it can be a manipulative move because it's the start of the week. Okay, and then on Tuesday, it is forming some kind of what do you call it, lower type of candle. Okay, let's see what is going to happen. But I think it's going to relative equal prices. Can you see on Monday and on Tuesday? This should be taken before the price goes in, like goes downwards. I'll prefer this thing. Okay, sorry, the Monday is it's not equal highs. It's like the price just closed there itself. Okay, it's not some equal highs. There's no equal high and then it is formed here. No, the price closed in at that position. So Monday it closed here, Tuesday it opened here. Okay, that's why it was like looking like some equal highs. Okay, what can I do now? The point is this point, and these are sell side liquidities. Okay, the price has gone below a little bit, then trying to come up again. Buy side liquidities are taken. This is the order block. and the price should reject from price is rejected and price has been put price swing. The price below, expect the price to upward price swing, the equilibrium point. Well, I should out the energetic movement. The energetic movement is from this point. Go on for 1 hour time frame. So energetic point move is one from this to this point. Fib body of this equilibrium point is nearly this 0.5. I expect the price it to at least. So the equilibrium point is this line of this particular swing. Should come back to that point, okay, and take out that equal low. So sorry, that low. Got it. So that should be taken out because our buy side liquidities are now taken. Should expect the price to go downwards because we are expecting the price to go downwards. See, there was some fair value gaps that was created. Okay, I could have taken a trade, but particular thing could have eaten all of my stop losses and profits. So let it be. So I should delete this point. Okay, and here we are having the lows. Okay, so this point is not taken, and this low is not taken that much. It means the price is definitely going to come backwards. Definitely going to line. Now 1 hour fair value gap on one. I consider this fair value gap. Now it should start down and some kind of sell side scenario to be found so that I can take a downward trade. Fair value gap was in here. We already know uh, sell side was there. If it is only touched a little, it has a high chance of coming back. So it came back, pierced it, and then went down. Then again came back, then again down. Now it was trying to rally upwards. I am looking for a sell scenario. Okay, so this is what this is 20 means around 10 10 p.m. of the Indian market. Okay, it's around like somewhere we are in the New York zone. Okay, and it's rallying upwards. Here we were at 18:15 Tuesday. So New York started with a downward move and then started going upward. It's manipulating the market. First on downward seek, then went on to upward. Got it? Same way I guess for London. Where for London it started going down, it going upward, then went down. Okay, let us do some kind of movement. It's 10 p.m. okay on Tuesday, and obviously I will be sleeping at that time. 10 p.m., 11 p.m., 12 p.m., 12. I'll start sleep. Okay, it's taken till then, till the next day, 7:30. I'll see what is going to happen. But it has reached in this fair value gap. Okay, let me just try to go on a minute time frame. Very small. 5 minutes has went into this fair value gap, and now it is thinking that it is going to do the motion, the PM session. Okay, is it forming some highs? Yes, some highs are formed. What do you think? Those be taken. One high is formed. After this high, it got taken, then it went down. It's okay. I don't think it's there. Let's see what kind of movement will show over here at this point. It has willingness to go downward. So the price has broken below this point. This is the only fair value gap that I can find. Price has broken below this point. Okay, want it to go in this fair value gap. It's fair value gap, fair value gap, fair value gap. Okay, this is the zone of the fair value gap that is created before the price broke. Here the price is being broken now, right? Some willingness to go down. Time right now 22:11 is, oh sorry, 22:11 is in 10:11 p.m. Are going to as a flag pattern. Expect fair value gap. Would I be waking? Respect it. Break it down. Here price movement. I should not get attacked to any low that is broken. Let's see. 23. Definitely have it. Fair value gap is being created. Correct. Okay, so let's see what is going to happen. In this fair value gap, it is go. Time right now. It's 10:30. Okay, so somewhere around 10:30, the movement has started. Okay. Okay, it is trying to form these equal highs. See, it has formed these equal highs somewhere. Okay, the levels are linear. Okay, so the chance of them being taken is higher. So I expect the price to take out these highs. Okay, now let's see what the price wants to do. And here is sell side liquidity, sell side liquidity, sell side liquidity. Okay, so this is the structure that is just formed. Let's see if it is going to break this low or not. If it breaks this low, then I will look for sell side trades without actually wanting this buy side to be taken. Got it? Take out. Okay. So take out this buy side liquidities. Okay. I think I should go on a 1 minute time frame. I don't think this upper buy side liquidity will be taken because it might be because of this order block. Okay. Order block rejection can be there. right? At least it to be in this fair value gap. There is our there is a fair value gap as keep my stop loss over at this gap has been high has been taken. Okay, and price went into this fair value gap. High is what the fair value gap. Actually seeing this fair value gap. Okay, now there's a price swing downwards. Okay, I can now take a trade. Okay, with the minimal risk, right? Because yeah, broke down fair value gap. What is the time right now? Okay, then 13th. Why do I expect the price to go downwards? When it started, it's so it started going down, then it showed us a swing upwards. Okay, now I'm looking for a downward trade. Is it a good idea? Why this small thing? Good idea. The markets are it did a downward swing, and I'm thinking for a downward swing again at the middle, but it should not happen. I guess. Let's see. I'll take a trade. Put was at the high of like, look for the recent sell side liquidity. Okay, recent sell. Uh, Short. Sell market this current balance 0.10. See, if I'm not winning any trade, the only loss I'm going to take is $10. That is the minimum loss, and I'll keep doing it until and unless I am profitable on some trade. Okay, because if this is happening in real life, okay, and I'm losing trades row by row, then obviously my trading psychology will be kind of fucked up. So yes, I'll try keep going. Okay, why did I keep my stop loss at this point? Because it my stop loss in a fair value gap, I can reach to that. Very good. I anticipate it has taken buy side liquidities before it moved. I didn't have any patience. That is what I did wrong. But I've had a pace. And the buy stops are taken. Okay. Let's now expect it to move down. Or am I just forcing it to move down? Think about this. Forcing it to move down. Should actually move down. What should happen? Buddha swing at 12:30, it went down, take out the sell side liquidities, then it went up. Okay, so it took out sell side liquidity, then it went for buy side liquidity because the daily bias would have been up. Why am I just for downward trades? Why am I forcing the trades? Something wrong for me, right? 1080p. Let me just check my current. So it's going up again and again and again. Sell side liquidity taken, then went to buy side liquidity. Also the price is reaching the equilibrium as well. So if I would have thought about a daily bias which is bearish, sorry, bullish, then it would have been correct. Okay, now because it got up in the London market, I think it should go do the same in the. But it shows that I'm here. I can see good fair value gaps. Okay, 1 hour fair value gaps. Got it. So now this price has been taken. Okay, this upper side liquidities has been taken. Now the price is under this fair value gap. Okay, this with this. Okay, price should reach into point. Can you see this fair value gap on a 1 hour time frame? Okay, and wait, well highs are also there. They can well be. They can also be taken. Not expect them. Want to expect that equal highs can be taken. Equal highs are at this point. Okay. Also because equal highs are there and between 76, 76 and 37, 37. The price should reverse. Let's see what it is trying. It put some line. It delineate value gaps. Now we have a fair value gap here. We have buy side liquidities. See, these are equal highs, okay, and it didn't get taken. I think the market is now going to be taking these buy side liquidities. Okay, what I expect. Yes. Okay. For a moment, expect it to be bullish. Take out those buy side liquidities. I will wait for a swing downwards. Well, I was going through the high probability scalping series. Okay. Head. Okay. So let's just bias set this thing to be actually bullish. Okay, this bias to be bullish. If the bias is bullish now I expect it to take out the this buy side liquidity. Okay, that is my draw on liquidity. So this is a recent swing high that has been broken. Okay, so this swing high has been broken, and now I want the price to show me what I want the price to show me a recent downward swing. Okay, so on mint. The only problem arises when in 24 minutes and I still have not got any kind of trade, but it's totally fine. Rest behind setups, I'm still learning. I hope what is watching. Okay, buy sell liquidity, and this is what recent swing high, a recent swing high which has been broken. This is the swing high which has been broken. The recent swing has been broken. There, when it broke this swing, we are waiting for swing low. There is swing low, but the candle is way too much high. Okay, let it just go like this. This point. Okay, this buy side liquidity is now the equilibrium itself. Okay, if it swings down from this, I don't know if it is going downwards or not. Let it just come back. What's the time right now? 30. Let's see what it is. It's trying to show, it wants to go downwards. Okay, market sector. Now go on 1 minute. There is any change. There is any sudden movement or change in market sector, then we are going to take an entry buy side thing. There is a sudden change in market buy side liquidity. Okay, this thing got taken. This is the market structure shift. Before the market break it down. Okay, this is the fair value gap that has been created before the market broke down. For it, if I take an entry here, I can put my stop loss here and my target over this liquidity that has been formed. Okay, I'll put what? Put a trade. Okay, I'll wait for the price to come back to this low. Okay, there is a fair value gap that has been created at this point as well. But if I enter at this point, okay, the risk reward ratio will not be really good. But if I enter at this point, the risk reward ratio will be very good. Okay, and also the price has not reached this fair value gap yet. I want it to be reaching there. Okay, let it reach there. Let it. Otherwise, I'm not great. No, doesn't reach there. Back. Oh, very good. Now it's in that fair value gap. Okay. Now let me just think what can be done. Upward swing, equilibrium, fair value gap, go to the upside, buy side liquidities, because there are equal fair value gap. This zone it should reach, and this is now the equal highs can be taken. Okay, right? So let's see what can be done. Okay, this is the point. Fair value gap. Okay, now let's enter this position. Okay, at this point I'll take okay 3.24. Let me just take. If I'm not winning any trade, I'll not take stop loss greater than 0.10%. Okay, current balance market again 0.10. Okay, it, I'll have to. What's the time right now? Wednesday is 25th January 16:57. Okay, Wednesday 25th January 16:57. I don't know what happens with this website, but it's just right. What this is this really forming or breaking a market structure to show willingness to go higher, or is it something else? Let me first load a layout. Okay, can it come back? If it come back to this point, can reach an equilibrium point. Okay, so this is only formed one point of thing. Okay, I can take a small loss, although it has not reached to the equilibrium. But if it has not reached to the equilibrium, why am I expecting it to go? But it has, touched one fair value gap, bigger point fair value gap, 5 minute time frame. This is the fair value gap that has been created, and if the market touches this, very great confirmation. Right now the market has touched this fair value gap. Okay, right, on 1 minute. It's 30. Let it go. There's a fair value gap. Okay, now this type of candle is found. I can take an entry. Target to the, let it be. Before the market started going downwards, and get buy market. It is about to take my target. Should I wait for my target? It is just a single point. Got taken. Finally, guys, after we are out of that drawdown, okay, finally $30 of profit after so much of 10, 10, 10 loss. Whatever the loss we made today, is it today or not? Oh, I can't see the date if I'm day or whatever it is. Now that buy sell liquidity got taken, let's see where the price is going to this fair value gap. I'll expect some price movement. Right now, 6. So the market has started. Could rally, but how much it will rally? That is the only target I could have. Because I have taken a $10 loss, okay, sorry, $30 of profit. Now I can go on to take out $15 of what you call profit. Okay, it's not that much, but I can't lose what I gained earlier. So I gained $30. I should not lose it out on one single trade. Okay, so I'll take $15 of loss again in the next trade. Okay, that is what I expect. So this is the low. It's going to reach, definitely it should reach to this particular equilibrium point. Okay, because I really wanted to reach to this equilibrium point. It's important. Okay, so that equilibrium point, the fair value gap looks like this. Should reach to this fair value gap. Okay, so low, this high got taken. Now let's measure the swing. What point? The 0.5 scenario is coming out at, looks somewhere over here. I can track this point. Place to 0.5. Okay, now that equilibrium is now in the, what do you call it, in the fair value gap. Okay, and this is the equilibrium zone, call it equilibrium line. At least money management will save you. Okay, see, I'm losing trades, but actually I'm still at that point all because of money management. Now I know why it is so important. Good. These are sell side liquidity is very good. Buy side liquidity got taken out. Is it going to move down or not? I'll try to see some kind of scenario that is going to be formed. any kind of fair value gap. Here's a fair value gap, but it's not a good price. Is not clear to what it wants to do. I'm gonna take a trade unless it gives me dumb clear about what it wants to do. Okay, so it try to make sell side liquidities from here. Okay, can you see? Swing high, swing high, swing high, swing high. Okay, like swinged high. I'm not showing a swing high, and it swinged high. Okay, so it also swinged from this high as well. It means I can take a trade and put my stop loss over here. Why? Because these are not equal. These are not equal highs. Okay, one is lower high and there's another high. It means this high has already been taken and there's less chance of the price to come back to this point. Okay, now and the price come back to this fair value gap. Should I take one entry or two entries? See, this is not that much confirmative trade. Okay, right? I'll take a lesser, or should I first see what is happening? Okay, now I can take trade, I guess, doing some kind. Here's the point. Go close here to take the trade. Fair value gap. It's a good chance that this fair value gap, this particular highs will be taken now because it's so near. Fuck that high. Okay, okay, okay. Should have done this thing. This entry over here at this point. It broke the low momentum, came back to that point, gyrated for a while, then went down. Should have taken that thing. Next I'll. But anyhow, this trade is missed, so I can't now. Uh, what am I doing wrong? I didn't take the trade there. Why? Because it was fitting into my system, but fitting in my. Why didn't I take it? Because I thought so. There is no point me think that I will be taken or not. If it takes out, takes out. Okay, it was in my system, but I didn't take it, and still it gave me another chance. Okay, and I didn't. I was not able to see this thing. Okay, told me that you want to go down, level a gap, come back up, down. Anyways, it's fine. It's fine. Okay, you're learning, right? Time right now, 19:52. It's 19:20, 8 p.m. Near. Okay, price reached equilibrium. I've taken my. Okay, now the price should gyrate. Okay, should show me because the equilibrium has been reached. Can you see? Has been just at that exact point. Can you see? That equilibrium level has just been touched. Can you see the bodies? At least I'm doing good with the levels. Sorry about the other things. I'm not good at order blocks. Okay. Somebody said hello, bhaiya. Okay, guys. Hello, guys. Okay. Uh, like I'm not good at order blocks. I'm right now watching that Scout Sniper series. I heard that in that ICT has talked about the order blocks. I'll brush myself more upon those order blocks, see what is actually happening. Okay. Okay, guys, I wanted to show some kind of structure. This is a downward structure. Okay, this is a market maker kind of model. Okay, let's see what it is trying to do. I'll see the movements over here. Okay, equilibrium has been reached. That's what I anticipated. Okay, if it could have reached at this point, reach at some kind of this point, and go back swing high, then it would have been more nicer for me. It swing down. Okay, I didn't. I was not able to catch this swing. Okay, it's fine. We'll wait for another day. It's what? It's Wednesday, right? Okay. So now, mm, nearly around Wednesday. Okay, this is what? This is Wednesday. Okay. Nearly around Wednesday, if the market wants to go higher around Wednesday or Tuesday, London close, London open, the low of the week forms in. Okay. I think is it trying to form that low? Then I will look for a higher price. The fair value gap. There's a fair value gap that has been created. Okay, right. No fair value gap. There's a fair value gap. It has been created here, but no change of structure was there, so I didn't take the trade. Right. Hello guys. Hello. Nice teaching. I hope I yes, like I am watching the so somebody who's watching the recording. Oh, I am laughing. Is that's going 3 minute time frame. Fair value gap created. Should I take another entry or not? The time right now is 8:31. Okay, sorry, 8:21. 8 p.m. 21. I'll be wake up. Okay, there's a fair value gap that has been created. Okay, but if I take a trade on this thing, how much the stop loss would be going to be larger? Expect the price to go down. It doesn't go. I am not. Okay, we can see that this fair value gap inverted. Took an entry on that fair value gap, and then it went on higher. For sure, chance this high is going to be taken. Yeah or not? Okay, the candles are within this. They've still got a little more room to catch on the trades. Okay, catch on the buy trades. Time frame. Could we have formed this some entry over here? See, the market structure changed from this point. This is fair value gap. Could have entered and put my stop loss at here to take an entry outside there. Okay, to take a high or this point. Let's see what it is going to. I take 22 and 17. Okay, high price swing. I expect price to come equilibrium. The time right now is 10. I've already taken one trade. There's no. Yeah, check. I hope I'm audible, right? Okay. This is a high price swing. At least I want the price to reach to some point of some equilibrium point, so that I can take a look for another higher trade. Okay, so let's see if it's coming down. Structure of equilibrium point, 3 minute time frame. Now let's pick this equilibrium line. this point. Okay. My voice is too low. I hope now my voice is okay. Is my voice okay now? Hello, hello, mic check. Is my voice okay now? Hello, hello. I'll increase the maximum sound. Hello, hello, mic check. 1 2 3 4. Hello. I hope it's okay now. I have set the sound to full. Okay, okay, got it. Okay, now this is at equilibrium, right? So if it reaches to this equilibrium, I'll expect. Okay, now it's okay now. Yeah, it's okay. Thank you, thank you. Now, see, I wanted to reach to this equilibrium point. Okay, if it reaches to this equilibrium point, then I can look for some kind of buy trades. Okay, I'll expect at least. Okay. Is there any fair value gap that I can see across this thing? No, I can't see any fair value gap. Only fair value gap I can see is this thing. Okay, if it comes to this fair value, there's a I don't know. There's a higher conviction of this thing to reach over here. Okay, see if this. Let's see on Fibonacci. What is this zone? Okay, I'll keep saving the drawing as soon as I go forward. So this fair value gap, it just got touched one time, because I have seen when the fair value gaps get touched one time, the price will surely come back to touch it again. Got it? That's what I have anticipated. And also the 70.5 OT retracement is also in this fair value gap. We can look for an entry either in the London zone or London Gill zone or in the New York Gill zone. Okay, that's what we can do. So somewhere we want the price to reach this equilibrium. Can I take some trade? Okay. There's a higher fair value gap. Okay. Fair value gap right in over here. Okay. I wanted to take sight and go back to this zone, like somewhat like this. This is where I'll take my, this is what I anticipate. Let's see what it is trying to form. Is the low broken? Is the low broken? Price could. Yeah, now I am in a low risk three. Okay. Yeah, I want the price to go to this equilibrium, but right now what is the time? It's 12 a.m. I can see an entry, but should I enter? It's 12 a.m. Uh, let's see if it is going to enter or not. Carried between these levels. Should I wait for next day to for the price to come back to this point and then take off? What do you think, guys? Okay, let's go in. Okay, what's the time right now? 0 to 1. The market is going to end, and I'll not get any kind of movement. Okay, let's leave it. Not in my time. I'll not take it. Good decision. Price is doing variation between this fair value gap. Oh, nice. What's the time right now? It's 1:21. I'll wait for the next day. Wait forward for the next day. Okay, see the price is rejecting this level. Okay, I told you that this is the fair value gap. It was fair value gap on the prior time. Okay, a big fair value gap, 1 hour fair value gap, and this is an equal high. Okay, the price is rejecting from that level. Price movement low or not. Now I don't think the price is going to reach to the point of equilibrium. Okay, there's another price swing itself. This is the price swing. Let's forget about this price swing. Let it be, guys. We'll have to. So this is a fair value gap. This got in. This fair value gap got inverted. The price, a great chance of it to come back. Okay, somewhere like do this, somewhere like this. Okay, somewhat like this. Let's see if it is able to do this or not. Concurrent viewers 0, cat rate 0, but views 4. Very good. But anyways, I don't care about that. So in this zone, hello bhaiya, bye. Okay, bye guys. Bye, bye. Okay. This is 70.5 retracement. Okay. If it comes down to this zone, okay, we can expect, see this 0.5. Okay. If it comes back to this zone, it can take out this low as well. It can take out the fair value gap, and then it can go upside to take out these buy side liquidities. That is what I'm expecting. Okay. Something like this at this level got taken. I'll take the entry here and let's see what is going to form. Time right now 5:20. Hmm. Or not about this. 45 patients. Twenty reached down. For 11:30, it has reached downwards. Okay. Sorry, 12:30. It is going to take these sell side liquidities before going up, I guess. Much gyration on 1 minute time frame. Okay, but we can see on this 1 minute time frame. Okay, this high has got taken. This could be the target, like drawn liquidity is on this point. Also the price is right. I wanted it to be in this. Okay, at the point when it's 13:31. Okay, it's going downward till this point. At this point it was downward 1:30. So let's see, this is the fair value gap created before this buy got taken. I expect the price to take out this buy sell liquidity. Okay, let the price come back in this. Why do I always miss? Because I don't. Ah, damn. But if, one thing I could see that before the okay, I think the New York market is about to start. That's why it has started falling. Okay, now at least try to have a movement in here because this is a low. We want a higher low in case of New York. Okay, then see up. Okay, just buy side trades, market maker set model, then market maker buy model. 1 month. Okay, we are on 1 minute time frame. We are in this zone trying to take price. So this fair value gap that is created already, we can see the price getting stuck in this point, and we take an entry. I'm not able to see any kind of reversal or something. Let's this low got taken out. So the recent high got broke. The fair value gap created. You know what? I should enter the fair value gap. That's it. It's going to lose. It's going to lose. It's for learning. Okay. Very good. It's in the fair value gap. I'm going to take an entry because this high got broken. And yeah, what's the time right now? It's 5:30. So before the market has started, the New York kill zone has started. It has done a downward swing. It means if it has done downward swing, okay, now I have more conviction, okay, because I won the last trade. I'll be taking a 0.20, okay, $20 of what you call it loss. Where should I keep the thing? Because it has been taken now. Okay. It's not been taken yet. Wait. It's not taken. It's not taken. Then I should keep the stop loss a little away. Okay, they're equal lows. Be taken because market has not started yet. It's 15:30 exactly. So it took out the buy side liquidities. I think it's going to take out the sell side as well. It will take out because the market just started and took out the buy side. It means it wants to take out the sell side liquidity as well. Now the sell side liquidities are taken. Now let's see what is going to be anticipated. Okay, up, down, equilibrium point. This low got taken. This low got taken. Uh, the this is the fair value gap that was inverted, and I want this particular thing take a bounce from this fair value gap. Okay, take a bounce from this fair value gap, and I will try to form my buy entry somewhere over at this point. If it's inside this thing, then it's very good. Okay, it's three. The three. Show me some kind of buy entry in this lower fair value gap. Kept on going. If this swing high is broken, here's the point. Can I enter? Was I expecting the price? Not getting said. I am just getting pissed off from this. Although the it is way too good. Time right now 15:50 has been falling. That's what it is trying to do. Okay, the point 0.5 equilibrium level has been reached. Can you guys see? The point 0.5 equilibrium level has been, it has showed a bounce back from this point. We take it from this for it higher time frame to confirm it. Now, now I want to see some kind of reversal from this. Okay, show me some kind of reversal. Here I want it. Was it? Uh, Here we can see market structure. Okay, gap at this point. Couple of it is. I'll decide the target later on. Okay, this session don't need to go longer than point. Okay, last trade of the day. It gets buy, start, done for the 47. Back in the session to see what is going to. Okay. Till then, bye bye. See you. Have a nice day. We are going to end the session over here. Bye, guys. Wait. Before I see you, bye. Forgot to show